Good evening to all of you, and welcome to the first study group meeting of this year, 23-24, which is also our Silver Jubilee year. We are entering into the 25th year of our existence, and proud to have you all as members here. As you all know that coming to today's topic, audit trail, we know that this was supposed to come 2 years back, but due to the glitches, it has been postponed again and again for two times now. So yes, we were not prepared then, but and it is applicable from 23-24. And we have with us two eminent speakers here. We will be discussing both the law part of it and as well as the practical aspects. To take up the law part, we have with us CA Chintan Shah, who is also a past convener, core group member. To take up the practical aspects to demonstrate on Tally, we have with us CA Puneet Mehta ji. He will demonstrate on Tally how it is actually done, what is to be seen, how can we guide our clients, all of that. So looking forward to a very interactive, informative session forward. I would like to now call our coordinator today, our core group member CA Atul Mathuria ji, to introduce both our speakers formally. Thank you.
Good afternoon. We said that it is a very interesting topic today, and topic in a way live, because we all need to follow now this audit trail mandatory. Without that, it would be a default. So we have very good two speakers. Let me just introduce them in brief. First, introduce Mr. Puneet Mehta. He is an enthusiastic. He has been sharing knowledge on software in India as well as abroad for last 20 years. Have been working closely with numerous small and medium scale enterprises to have their MIS report operations streamlined. He is a co-author of the book Tally for Professional, published by WIS in ICI in 2019, developed fully integrated module in Tally for builders, chartered agent, schools, college, etc. Addressed Maharashtra Sales Tax Practitioners Association for implementation of GST and earlier VAT audit in Tally.ERP9. Ex-visiting faculty to Direct Taxes Regional Training Institute for providing specialized training in investigation using Tally to income tax officers and commissioners, faculty in ICLS Academy for training of IAS officers at IICA campus. Puneet is not new to us. He has been addressing us, in past also many a time. With this small introduction, we would like to welcome him, and I request Khushbu Shah, CA Khushbu Shah, to hand over the memento as mark of our love and affection. Now I would like to introduce even the second speaker right now. Our own Chintan Shah, as we have said, he is our past convener and very active person. Chintan has qualified in 1999 and ranker completed MBA in ICI with rank LLB from Government Law College and BCom from NM College. He is a managing partner of Chotalal Chogmal and Company. He has experience of over 20 years and specialization in providing audit assurance service to India in multinational companies. He has undertaken various statutory audit of manufacturing companies in field of plastic processing, non-ferrous metal, publishing, packaging industries, LLP, SEZ unit, special economic zones, assurance service to wholly owned subsidiary of foreign companies and providing consultation in FEMA and RBI related matters. Also servicing foreign banks and Indian private banks. He is a ex-vice chairman of Taxation Committee of Maharashtra Chamber of Commerce, Industry and Agriculture. He was professional lecturer in college and visiting faculty in management school, past convener of Javinagar CP Study Circle. I have long association with Chintan. In fact, I knew his grandfather also very well, and his father is also a friend of mine. So I really, when we see people coming up like this, we feel really proud about it. Now I request Mr. G.D. Arora to kindly hand over memento to Chintan.
Full house.
I request Sunit to first take over. Thank you.
First interview.
Chintan. Acha, first Chintan.
Very glad to see the house full today.
Yes. I'll sit on the.
Yes, we'll sit there.
the-
No, we get more chairs. Chairs.
Not an English.
हाँ जी भी लेते और chairs.
Thank you.
Which chairs are here to that?
Who will come?
Will you take this now? I'll be there. ऑटो मोड पे नहीं है ना
नहीं it will start one by one click करो
okay
if you have the
I don't know everyone. Right. Good evening everybody. Thanks convener and deputy convener for this opportunity and Atul bhai for the introduction. And one more thing you missed, my uncle and they were classmates in school, so that was an additional thing on the personal. So pick for the day, I'd like to tweak the topic which has been published a little bit. Instead of audit trail, I would like to cover the audit and account rules 2014, which have been announced under the Companies Act 2013. So before we go on the audit trail, which has been a part of the account and audit rules, I would like to have a background of what has entailed into these changes. So we'll have some background, then we'll have the company's accounts rules. In there are rule 3, which is very relevant for the today's topic, and the proviso to rule 3.1, which has been the latest insertion effective from 1/4/23. And then we'll go on to the which is applicable to auditors and the rule 11G in particular. So friends, section 128 of the Companies Act requires each company to maintain books of accounts which are prescribed and to prepare and keep at its registered office the books of accounts which will show a true and fair view of the transactions undertaken by them. Now we have to go to the definition of books of accounts, because books of accounts has been repeatedly used throughout the Act. Again, what I mean by books of accounts. No. So books of account. Books of account has been defined under section 2, subsection 13 of the Act, I'd like to read the section there as it is. Section 213 includes, that is the books of account includes records maintained in respect of all sums of money received and expended by a company and matters in relation to which there is place. 2, all sales and purchase of goods and services by the company. 3, the assets and liabilities of the company, and the items of cost as may be prescribed under section 148 in case of a company which belong to any class of company that's specified under this section, that is a cost record. So books of accounts is required to be maintained by all company, and there are implications in terms of what to keep, how to keep, what type of records to keep. This has all been mentioned in section 128. I'm giving this background because to understand what is audit trail. Okay, sorry.
Click on this.
Yeah, perfect. So we are on section 128, the maintenance of books of accounts by the company. Section 128 of the Companies Act, which says maintenance of books of accounts. In particular, section 1 has prescribed the method in which the books of accounts have to be maintained, and there are some rules which are there for which how the books of accounts have to be maintained. 3 in particular talks about the books of maintenance in the electronic form. Now all the companies in particular are maintaining the books of accounts in the electronic form. That is where the the account rules are coming into place, whereby we are required to keep our accounts in electronic form. What are the requirements in how to maintain the books of accounts in electronic form? So particularly subsection, the rule 3, there has been recent amendments in rule 3. Wide notification dated 5th August 2022, very recent amendment, but it has been unknown types, most of the people are not aware, which became effective from 11th August 2022. There have been 3 amendments. I'll talk one by one. First amendment came in the availability of the books of accounts. Rule 3.1 of the company's the account rules require that the books of account should be available at all times. The word all times was missing in the earlier rule, and now it has been added all times. I think let's go one slide further, just a minute. Yeah, at all times. So the all times is the word which has been added in rule 3.1 of the company's account rules. So you should be, the books of account should be accessible and available at all times, at any time. So anybody wants to see, it should be available. So this is an added word, all time. The second amendment came in the maintaining of backups. The rule 3 also says that how and where to keep the backups. Backups are required to be maintained and it should be available at any time. This again says that the backups should be available on servers which are physically in India. That was a missing part. And the physically available in India is the word which says that all the servers of the companies should be in India, though the software may be outside India, though the backup could be outside India, but the server on which the backup is there should be physically in India. So this is another amendment which is there from August 2022. The third amendment is in relation to a service provider. Many of the companies seek a service provider to maintain their books of accounts. There is outsourcing. In the relation to a service provider, if it is engaged by the company, it is required to inform the ROC about who is maintaining that, where they are maintained, who is the person in charge at the time of annual filing of accounts. So these are the 3 amendments with effect from 11th August 22. And there was no time given for any changes to be made by the company. And it was a very drastic move, which the company should have been implemented by today. And one more thing I missed on, that backups, which is to be on servers in India, the word word used is the daily basis. The backup should be done on daily basis. Earlier it was on periodic basis. Now it is daily basis. So now these were the 3 amendments in rule 3. Now we go to the topic proper in terms of the new provision which has been added in rule 3.1, which is the most discussed one about the audit trail. So rule 3 is applicable to the management of the company. the person who are responsible for the maintenance of the books of accounts. So a new provision has been added to Rule 3.1, which states that it's the management responsibility that provided for the financial year commencing on or after 1st April 23, they will use such accounting software which will be maintaining the books of accounts, and an audit trail would be available, which would be recorded. It could not be edited, and the books of accounts, any changes made should be available for identification. So the words as used is the management responsibility is provided that the financial year beginning on or after 1st April 23, every company which uses an accounting software for maintaining its books of accounts shall use only such accounting software which has the feature of recording audit trail of each and every transaction, creating an edit log of each change made in the books of accounts. Now again, the definition which you just discussed about the books of accounts become relevant, because only what is considered as book of account will be applicable for the maintenance of audit trail. If something is not a books of account, then the maintenance of audit trail is not applicable to that portion. And the audit trail should not be disabled at any time. So this is just broken up the definition again. Audit trail, not editable, and you cannot disable it, and available all time. Now, this was the responsibility of the management. Now, as we as auditors, what are the responsibilities on an auditor? So thus, an amendment came in Rule 11G, which has been the Auditors Rule 2014, which a new insertion called Rule 11G has been inserted, which states that whether the company in respect of the financial year commencing on or after 1st April 22, here the applicable date has not been changed. It is still 1st April 22, has used accounting software for maintaining the books of accounts, which has a feature of recording the audit trail, that is an edit log, and the same has been operational throughout the year. It cannot be disabled even for a single day. For all transactions recorded in the software, and the audit trail has not been tampered, and the audit trail has been preserved by the company as per the statutory requirement of record retention. Now, again, we have to go to section 128 subsection 5, which says that all the records of the company, all the books of accounts of the company have to be maintained for a minimum period of 8 years. So even the audit trail reference has been given to the record maintenance rule, which says, as per 128 subsection 5, all the companies have to maintain the books of account for a minimum period of 8 years. We have to again emphasize here, the audit responsibility is only in respect of books of account. The other areas which are not books of accounts as defined in the section 2 subsection 13 of the Companies Act will never be under the purview of the auditor for reporting on the audit trail. Yeah. Now, the question on what is the applicability of this provisions and the rules which have been changed. As I spoke, the audit rules are applicable from 1st April 22, but the accounting rules from 1st April 23. So there is a disconnect between the rule for the account maintenance and the rule for the audit. So we as an auditor should report for the financial year ended March 23, which is the year which we are going to audit now, that I have given a suggested reporting clause. Since the provision to clause 3.1 of the company's account rules 2014 is applicable for the company with effect from 1st April 23, therefore reporting under Rule 11G is not applicable for the financial year ending on 31st March 23 in respect of the accounting software for maintaining audit trail. This clause 11G should be inserted in your audit reports. Otherwise, we are not reporting as per the requirement of the law. And we have to report in this or some other manner, which way we conclude and we pronounce that this year we have not reported in 11G because the company was not even required to maintain. Now, companies rules, section 8 companies all maintain the audit trail, and our reporting also will be there for the section 8 companies. If somebody is maintaining manual books of accounts, then the responsibility under this provisions will not be applicable. But as an auditor, we'll have to report and bring out the fact that as the company is maintaining the books of accounts in the manual form, we are not reported under section clause 11G of the account audit rules. So this could be an area where we have to ensure that if it is entirely manual books of accounts, then the consolidated financial statements. The Companies Act states that the maintenance of the books of account rules are applicable to the standalone as well as the consolidated financial statements. So if you are auditing any consolidated financial statements, which have components of joint ventures, subsidiaries, associates, whatever, as per the Companies Act, then we are required to report under clause 11G for the consolidated financial statements also. In terms of consolidated financial statements, it may so happen that some of the components their auditors may not be required to report under Rule 11G because it could be a foreign company, it could be a foreign branch, it could be an associate, it could be an LLP, it could be a partnership firm. Though the consolidation is required, but as their auditors are not reporting under 11G, you will have to bring down that fact in your audit report that when we are reporting under 11G on the CFS, those many components 1, 2, 3, we have not been able to report on 11G because their auditors have not reported on it, and it was not applicable to those entities, those components of the CFS. Now, we know what the management has to do, what the auditor has to do. The next would be what could be the possible audit approach in knowing about these, or whether the management has implemented this, whether it has not implemented, and what could be the different audit approaches where we could start our audit process. So we as an auditor will have to employ a mix of different procedures, management controls checking and direct checking. There could be, we need to identify first, as I've been harping on, what constitutes books of accounts. Because if you are going in some area where it is not books of account, you are wasting your energy and you may not do what is required in terms of on the books of accounts. So correctly we identify the software, the controls, pardon? Can it be later? It'll be better. Let me maybe it may get answered during the course also. Another different IT controls, IT environment, web portals. These may sound too technical, but it is there now. As we are auditing in an IT environment, we need to be aware of the different IT controls, different IT environment where we are working. We need to say that if there are different softwares being used for different components of the books of accounts, then we need to ensure that the audit trail is available in each and every software. Many companies have different softwares for sales, different software for fixed asset register. So each of such software, because each of such is a part of the books of account, and thus we need to ensure that the audit trail is available in that particular software also. We have to also ensure that the audit trail is captured for each and every transaction of the books of accounts. If there are any changes, who did it, when was the change done, and what was the data that was changed. You have to ensure that the audit trail is enabled at the database level, and any changes are made directly by logging into the database, how the changes are made. So this could be a little technical, but we have to learn those things and ensure that we meet the requirements of the law. The audit trail is retained as per the statutory requirement of record retention. Again, there is the cost of repetition. Because in the second year onwards, we'll have to report whether the records have been retained as per the record retention rules, minimum period of 8 years. Again, there is a clause in that section 128 subsection 5, which says that if there is any litigation going on, if there is any case in terms of the Companies Act for the company, then they have to maintain for an additional period of time beyond 8 years also. We have to also ensure that the audit trail is complete, it's accurate, all the fields which are changed are available, there should be no tampering of the date and time, and many more. And we may also need to use the services of some IT specialist to meet our requirements. Here, we need to also come into play and ensure that there is an interplay between section 143.3.1 and Rule 11G. 143.3.1 requires us to report on the provisions of internal financial control on financial reporting. which we have been issuing since like what 3-4 years now. And in that, there is a mention of the word audit trail in para 52 of the guidance note, which has been issued by the institute. The audit trail word there you use there is in a very brief manner, because at that point of time, 11G was not there. But we all understand what audit trail is in terms of there should be some trail if you are editing transactions, if you are modifying it, what are the controls. And it may also happen that when you are checking IFOCR, you may come into this, you may notice that there are some missing controls. There are some things which are not available. So also, and we have to see that just mere non-availability of audit trail is not necessarily imply failure of the internal controls and operatingness of the internal control. Because IFOCR states that it should be, there could be some corrections also during the year. But G, they says that it should be available throughout the year. So these are some differences which we need to ensure while reporting under this clause. What would be the reporting like? In the respect of audit trail, the following could be the likely expected scenarios where you find that the management has maintained adequate audit trail as required by the accountants. Management may have not identified all records transaction for which audit trail should be maintained. And the accounting software does not have the feature itself to maintain audit trail, or it was not enabled throughout the year. Scenarios 2 and 3 would require us to report a modified or a qualified report, depending on the severity of the lapses in terms of the audit trail. The illustration, the institute has also come out with a implementation guide on Rule 11G, which has been published few weeks, maybe 10 days ago, under which they have given an illustration of an unmodified reporting. This is a verbatim copy from that implementation guide, which says that if you find that all things are okay, what could be the draft report which we would issue on the clause 11G. So it states that based on our examination, which included test check, the company has used an accounting software for maintaining books of accounts, which has a feature of recording audit trail facility, and the same is operated throughout the year for all relevant transactions recorded in software. Further, during the course of our audit, we did not come across any instance of audit trail feature being tampered with, and additionally, the audit trail has been preserved by the company as per the statutory requirement of record retention. So these are the parts how you will report in your audit report under 11G. Now, what could be the possible qualification, reasons for qualifications or modifications in your unmodified report? Some instances which are identified are the books of accounts are not accessible in India, because here again we have to go to the reference of maintaining the books of accounts in India, because a company is required to maintain books of accounts and the backups in India, which are available in India. Backups are available, but backups are, see again, the vouchers and the invoices is a part of the books of accounts as per 2 subsection 13. So if that is in electronic form and you are not able to access that, then again, it's a qualification because the books of accounts are not adequately maintained. Now the backups are maintained physically, but not on servers. Backups are maintained electronically, but not on server. Backups, server is not physically located in India. Backups are done weekly, but not daily. The backups are done daily, but there may be some breakdowns during the year. Backup is being done on daily basis. Process was started in March 23. Prior to it, backup was done monthly. So these could be typical reasons which would entail qualification or modification in the report, the clean report which you would give. Other instances would be that audit trail feature was disabled for some of the records. For some of the, there may be some different softwares which are being used. As an example, I gave you audit software, fixed assets software, payroll software, sales software. Many companies use different softwares and then sync that data into the main accounting software. So those components, there was audit trail was missing, or it was disabled for some period. Audit trail feature is not operating effectively during the reporting period. Accounting software is maintained by third party because there is a service provider who is maintaining that, and we are not able to access the audit trail available with that service provider. There was a migration of the software. Again, we could not get all the data which was required to that. and the preservation of the audit trail was not there. This could be applicable not from 24, but next year onwards, because this is the first year of implementation. Here we have checked and ensured that things are available. We have done our testing. Then comes SA 580 about obtaining written representation. It's a very important part in your audit, representation from the client about the responsibility of maintaining, because ultimately the responsibility of maintaining proper books of accounts lies with the management and not with the auditor. So the likely components of the written representations would be, we have to ask them to acknowledge that they are acknowledging that the management is primarily responsible for maintaining and establishing adequate controls, for identifying, maintaining, controlling, and maintaining audit trails. The audit trail setup is their baby, not our baby. Though we may act as a consultant in a different capacity to do that, but as an auditor, the management responsibility to ensure that the requirements of the rules, accounting rules, are followed by them and the books are maintained with audit trail. The management has to state that it has performed and evaluated and assessed the adequacy and effectiveness of the company's procedure for complying to the requirements of the prescribed audit trail. There will be some testing whereby they say that the trail was there, it was effective, it was operating. All this is the management responsibility to give you a written assurance during the written representations. Management conclusion, when they have done the testing, they come to a conclusion that their trails were effective and it was adequate, and the procedures in related to the audit trails have been performed by them. Management also has to state that they have disclosed to the auditors all the deficiencies, if any, they have found during their testing. After the testing, again, we are also going to test them, but we need an assurance and disclosure of all the deficiencies which they have identified, which they have noticed during their testing. And instances also, if there are any frauds which are occurred due to the disablement of the audit trail or ineffectiveness of that, or there could be some mistake due to the software being, any bugs there. So this could be another area which has to be included in the representation letter which we obtain from the client. After the audit is concluded, next part would be our audit documentation. A sufficient and appropriate record of the transactions, what audit we have done, we need to maintain that. Is again a standard audit on auditing, standard to AC 230, whereby we need to ensure and we need to show and demonstrate that we have done our audit, and the audit documentation should be able to prove during our peer review process or any institute inquiry that we have done the due diligence. We have implemented the guidance note as issued, not the guidance note, the implementation guide, which has been issued by the institute in terms of the compliance for 11G, and also that we have planned and performed the checking of the controls which are required to be maintained for the audit trail. So this is the short which I wanted to share on this. There will be some questions which you would like to ask. Open for it.
Since we have a discrepancy in date between the applicability of the accounting rules in the auditing rule, stated at the bottom saying that the reporting under the rule 11G is not applicable. Should we not say, instead of writing not applicable, since the accounting rules are applicable from 23, this
is my
not made.
Yeah.
Instead of saying not applicable, because it is very much applicable. It is not possible to make since the accounting rules are there.
Fine, see, this was my view on how to draft a clause, because there is a disconnect between the two applicable dates. One date is prior and one date is later. So we are bound by the audit rules and we have to report. We have to report something on audit trail. How to report could be your prerogative.
So one is ERP software does not allow any changes or deletion in the original entry, right? Some ERP software don't allow. So where is the question of audit trail then?
Sir, each software has to be tested, what it allows, what it doesn't allow.
No, it does not allow only.
I agree with you. If you are satisfied that no editing, no changes can be made, you can give a clean report.
Sir, idea and all this is there. If who is doing the changes and what, that all is there. But
Let me
changes.
That, sir, if the software, if it is SAP, for example,
It is ERP only.
no, so if it is an SAP, or it could be some other software which doesn't allow any changes, then definitely you can give a clean report. So provided you have documented, you have checked and ensured that this is not possible. Even in ERP, sir, there are access controls whereby the administrator of the software, it is possible for him to make changes remotely directly into the database.
Yes, yes. Right.
So what you are telling is at the accounting level entry, at the data entry level, I cannot edit, I cannot change, I cannot modify. But at the database level, it is possible for some senior guy in the IT department to make changes which you would not even know.
So that you have to take from the service provider.
Definitely, or you know, ensure what methods they have done.
Credentials will be different. And
Definitely.
there you have to take that log.
I'll give you an example, sir, for an SAP company where SAP was implemented. The cost sheet for the valuation of the FG was running on auto mode. If somebody did a mischief and modified that, it's called a BOM, the bill of materials in the system, the entire valuation will go haywire. Nobody in the accounts team is even aware of it, but somebody in the IT team can do it in a click of a button and you don't know what is happening.
That's the super users.
Pardon?
I like to disagree with you. Sir, SAP.
Yeah, he was waiting. Yes.
Just 30 seconds. Okay, what? Sir, I want to assure him that come what it may be, whatever the program you may give for the SAP or the ERP, the SQL queries can run, and as you rightly said, the IT head or somewhere in the IT can make the changes, only then admin can. And you will not need any software. In any software.
There are definitely rights available with some restricted people who can make some changes. The SAP is one company which is providing here.
SAP ERP is the product name, SAP is the company. Now that we are on this topic of a CA, that the audit trail is maintained, not tampered, not done this, that, blah, 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 blah. Okay. Now, of a software, we can understand features, we can check, we can do basic things, right? He said by most of us. But is there any provision given that XYZ, this is a list of 100, 200 IT companies? If they certify that this is okay, we can take that certificate and say that
Based on the work of an expert. So let me answer this question. As of now, there is no list of identified companies.
If the Ministry of Corporate Affairs is expecting a chartered accountant to be a software professional, I think they need to change the curriculum. First of all.
Agreed.
Institute, Western India Regional Council, or any regional council or central council has made any representation in this regards, that the MCA needs to come back with some list.
I am not aware of this. And just to add on this, across the globe, no other country has such reporting requirements. India is the only country where such reporting is required. So they are expecting too much from us. I agree with you.
Sir, we are in this case, sir, we are now becoming, but we are not an auditor. We are becoming now bloodhound. We are going for a.
Sir, I am not a person to answer this. So,
sir, we are going towards the forensic audit, not the audit, and which I am not even capable. I don't even understand 90% of the words which are used in the IT.
agreed, sir. Many of us are not aware of it.
To think practically about it, this SAP and all this ERP, very few companies are using SAP or ERPs. At a smaller level, people are using Tally and all this. That's why these.
Sunil Bhai will come.
Now that if you have a team of IT people also along with you, you are employing them or you are taking their services for this specialized purpose, is one approach. And another is to rely totally on the systems audit report done by the IT department of the company and taking that report as a base. So that should be a mixture of both, perhaps.
What audit approach to deploy? You all are educated and experts in their own field of audit. Institute has come out with an implementation guide. We can follow to an extent the implementation guide, use our own skepticism, use our own knowledge, use our own expertise, to better this. That is the only thing I can tell you.
In FY like 22-23 also, we have to report on that also.
Yeah.
Under which section of the
You can think. I'll give you the answer. Somebody can give this answer.
We are all learning here.
No, see, it's a more, let us be interactive. She has asked, under which clause are we required to report on this aspect of backups? Yeah. So everybody can think, everybody is issuing at least one audit report of a corporate. No, not 11G. So this is not related to 11G. This is something already existing. Yeah. So
Internal controls, books of accounts. Major is books of accounts.
we are reporting under section 143(3) whether adequate books of records, books of accounts as required by the companies that are maintained or not. This is a part of that. Because as I told you, the brief I started with that, books of accounts are required to be maintained under 128. Rule 3 are prescribed under rule section 1 of 128. So it's a part of 128.
So this regular books of account is also very much it is interpretable. When I have 10 transactions in a year, so my company makes the accounts after the ending of the year. So whether it is a regular books of account, it is one's own interpretation.
No,
Sorry, Atul. Sorry, I like to interrupt here and just correct the notion. The rules what we discussed are in relation to maintaining accounts in electronic form. No, if you have only 10 entries, you say that I'm maintaining accounts on manual basis, you will be absolved of all the responsibilities under this.
No, I think
As simple as that.
Ask is that I'm maintaining, even if I have 10, 20 or 50 entries, I'm maintaining it in electronic form, but I'm not maintaining it like
Then see, because if you are maintaining in electronic form, the rule 3 becomes violation of the law because there is no daily backup.
Even page book and page book are required to be maintained.
Definitely. Yes. Yes. No, but in terms of the daily backup,
Writing of books, not saying about.
You mean to say 365 backup should be there? Do you mean to say 365 backups should be there?
So not three. I don't know. See, a backup mechanism could be additional backup, new backup. I am not a technical person. How? Incremental backup normally nobody takes new backup every day.
Yes.
It's just an incremental backup. Obviously, over it. I am taking backup on daily basis.
However, I will check.
Pardon, sorry, can you repeat? Subsidiary? Yeah, please.
Internal discussion.
Sorry, let me hear you. I can't.
Subsidiary company we have to mention separately properly.
Sir, do you issue separate audit report for each company?
See, we are also auditors.
Sir,
Individual auditors, what is there?
so they will report in the audit report.
Is it considered also?
Yes, definitely. You will issue a report on CFS.
Considered one.
So in that 11G is applicable.
So for each and every subsidiary company that a considered auditor will also specify about.
Yes, sir. Each individual component they will specify in the report. Now you, based on the summary of all those audit reports, in company X, a subsidiary of Mr. ABC Limited, it was not applicable, was not implemented, or in subsidiary Y it was implemented, subsidiary Z it was implemented. So you did draft your audit report according to the different components of the CFS.
Sir, can I have? Sir, we said that we need to retain the data on the server.
Server which are physically located in India.
My question here, how do I know the service provider who has come to me, he will maintain the server?
You will take a letter from the
So then the side.
Yes.
The management representation tells that if you have any doubt in that, you may be having invoices from that company, because if you are maintaining a server with some external agency, he will bill you. Uska company kahan hai, address kahan hai, itna to basic audit check you can definitely, you are required to do.
I give my.
Now I just a minute. In fact, if you are aware, we JB Nagar study circle, we visited a data center which was in Mahape, which we physically saw how the were maintained. So
When the action takes place, then I'm giving you an offer to maintain my account or keep my data backup here. It doesn't say when, it says that I keep. Unfortunately, majority of the people never check any data. Where are you storing the data?
now check. Dated 5th August 22. It was may not mention that the server should be located in India. Now it is required. So we'll fall in place with the law and ensure it is in India.
Ensure either a certificate or good and visibility.
Pardon? Sir, I technically, Bhavesh bhai, it cannot be attended. I don't know how technically backups.
Increment. It is not overwritten.
Acha. Okay.
Incremental backup. In case it is a daily backup, you are taking new backup, and it is over.
Okay.
Incremental backup, it is not over.
Okay.
But that is also weekly, fortnightly, monthly, yes.
Now.
Online,
Then you give salary to the weekend.
backup is not next year of your online.
Last one, we are already at 456. So let Puneet bhai also give, we get justice from what he has to tell. Yeah, please.
Can we mention it is manual?
Technically, yes. Technically, I don't know. Technically, yes.
लाल कलर का चोपड़ा लेके आ जाओ सब लोग. Hey, because that was required as per the retention of books rule. The audit trail also has to be maintained for 8 years. Yes. ठीक है. IT company का share ले लो और ठीक है. So last one thing which I would like to tell you. Definitely, it's a part of the question of give the answer. It's a very normal. Even you have questionnaires for any other process, workflow, your what do you say, the demonstration of the different things. Everything you have a questionnaire. You give them the questionnaire, get it filled. It's a very old method of an audit. What you do. So before I conclude, I would like to add one poser to you, which I was expecting as a question from you. Now, as the management is required to do all this. That is audit's prerogative. What will happen to the management?
Sections are now under criminal process.
Section 128, subsection 5 has a clear penalty being prescribed for non-compliance with section 128, which says that, it is
50,000 or 5 lakhs.
perfect. So, if the managing director, subsection 6, it is, if the managing director in charge of finance, the CFO, or any other person of the company charged by the board with the duty of complying with the provisions of this section, that is 128, contravenes such provision, such managing director, full-time director in charge, or CFO, or such other person of the company shall be punishable with a fine which may not be less than 50,000 rupees, which may extend to 5 lakhs. So this is again an awareness which we need to tell the management that भाई साहब आप अपना penalty भी देख लेना. See, what we can do is qualify, and if we qualify, now the systems are penalty with the management, and management के बाद में आएगा आपने हमको बोला नहीं. So we need to be ready with this also.
तैयार होगा पास्टर जी आपको बोलेगा क्वालिफाई
Qualify. ठीक है. Not everybody can afford that, sir. Not everybody can afford that. हाँ. बड़ी कंपनी. हाँ. We are all SAP practitioners. So how many of you companies can afford a 5 lakhs penalty? Pardon?
According fees.
वो तो नाटक है जाने को.
I have told one director to make this audit trial. He said I am inquiring with other traders, other businessmen. Nobody have done this thing.
सर
So,
आप अपना लेटर भेज दो.
started.
आप अपना लेटर भेज दो. उसको जो करना है वो करेगा. आपको जो करना है आप करो.
So we have to send them later.
I'm just suggesting you what you do. चलो भेजना नहीं भेजना आपका काम है.
Well, I have
See, sir, is oral evidence allowed in law? Simple. So fine, we conclude this and let Puneet bhai start his session. Thank you.
Chintan bhai, you have been really fantastic. I must say, you've covered the entire aspects of what is an audit trail, what is expected of the auditor, and how you can report the working. I also agree with what most of you said, that while we are chartered accountants, we are not supposed to be a technical person to check whether all the functionality which audit trail would require, is it there or not. I mean, it is yet a gray area, but then the MCA is putting the requirement, something or the other, what is coming, ये कौन करेगा, तो भैया हमारे पास एक जन है जो चार्टर्ड अकाउंटेंट है, वो सब कर लेगा. ये कौन करेगा, ये सब चार्टर्ड अकाउंटेंट कर लेगा. So that is what it is. The way in which things have been put up, and especially related to backups. I mean, it is really clumsy to check whether the 365 backups are there or not. What is it he is going to get out of that, even if there is a 365 days. So it is very difficult for that. But then we are living in the times where we are, whatever is there, based on that, let us proceed further. Some of us have already said that अगर मेरे पास SAP है तो मैं क्या करूंगा, अगर मेरे